What if I told you the modern stock market, worth trillions today, began with nothing more than a piece of paper and a promise? Back in 1602, the Dutch East India Company sold the world's first stock. They promised riches, effortless profits, and a share in something bigger than life. But behind that shiny promise, a web of crowd psychology, manipulation, and one of the most powerful financial games ever played. So, who started it? Who truly benefited? And why, centuries later, the same psychological traps still dominate our decisions? Whether you trade on Wall Street, dream of passive income, or just want to understand the system, this is the untold story of how money, fear, and human behavior shaped the world. In the 17th century, Holland ruled the seas, shipping spices and gold from Asia to Europe. In 1602, the Dutch East India Company, or VOC, launched with a bold plan to dominate global trade. They needed 6.4 million florins, about 300 million USD today, to buy 300 ships. Problem was, they only had less than 2 million. How do you bridge that gap? They came up with a game changer: stocks. The VOC split their capital into 2,000 shares, each worth 3,000 florins, and invited everyone to invest. From blacksmiths to farmers to nobles, people jumped in, lured by the promise. You'll get dividends from our trade profits. Within months, they raised the full 6.4 million florins, building the world's largest fleet. The first stock exchange opened in Amsterdam, handling 1,000 trades a day by 1650. But here's where it gets wild. Stock prices soared, not because the company was raking in profits, but because people believed they'd keep rising. In 1610, prices quadrupled on rumors of gold-laden ships. But in 1637, they crashed 50% when pirate attack rumors spread. Here's the twist. Many stocks were traded on pure hype, not real assets. A group of traders, called sitting traders, manipulated the market. These were full-time speculators who stayed seated at the exchange from morning to evening, constantly tracking gossip, news, and price movements. They spread rumors to pump prices, bought low from panicked sellers, and sold high when fear of missing out kicked in. The VOC thrived, paying 18% annual dividends from 1602 to 1690, and boosting Holland's GDP by 20% through trade, creating a new merchant class. But many small investors lost out, buying high and selling low. Ever wonder if stocks were just about investing? Turns out, they were also a tool for controlling economic power. Ever wonder why a piece of paper like a stock can drive people crazy? Let's break down the three forces behind the madness. First, fear of missing out and panic. In 1637, VOC stocks crashed 50% on mere rumors. In 1610, they surged fourfold because people feared missing out. In 2021, GameStop stock soared 1,500% in a month, driven by Reddit-fueled hype, only to crash days later. Psychology pushes people to buy at the peak and sell at the dip. Second, information as a weapon. Back then, traders rigged prices with rumors. Today, executives do it too. In 2018, Jeff Bezos announced Amazon's cloud expansion. Stock jumped 20% in a week, right before he sold $2 billion worth of shares. Information isn't just truth, it's strategy. Third, hype and liquidity. In 1620, the VOC made 1 million florins in profit, but its stock was valued at 10 million because people believed. In 2022, an NFT sold for $69 million, then lost value when the hype dried up. A stock's value? It's what people believe and are willing to trade. The stock market is a psychological machine, fueled by fear of missing out, rumors, and belief. This isn't just money, it's power and strategy. What do you think is really driving markets today? So what can we actually learn from the VOC's story? Here are 3 key insights. First, stick to data, not rumors. The VOC profited off ignorance. Today, you don't have to. Example, Amazon reported $574 billion in revenue in 2023. Use platforms like Yahoo Finance to check the real fundamentals. Data beats hype. Second, build your own edge. The VOC monopolized sea trade. Entrepreneurs today? Same strategy. Byju's, an Indian startup, raised $2 billion in 2020 by leading online education. A unique edge creates massive opportunity. Third, watch liquidity. VOC stock crashed when there weren't enough buyers. Before buying anything, check liquidity. Use TradingView. Can you sell quickly if needed? Liquidity equals exit strategy. These insights help you navigate today's markets, whether you're in Asia, Latin America, or Europe. Which of these mechanisms do you think is the trickiest? Let me know in the comments. Stocks, born with the Dutch East India Company, launched the modern financial system, but also revealed the deeper truth. Finance isn't just about money. It's about psychology, power, and timing. So, have you ever fallen for market hype? Tell us your story in the comments. Thanks for watching. If you found this video useful, don't forget to like, share, and subscribe to the Capital Compass, so you won't miss any future deep dives into the forces shaping our world. See you in the next video.